Hey, everybody, it is Chris Brown, your real estate professional and marketing entrepreneur. I hope all is well. We are here for another episode of State of the Real Estate Market. So, truly appreciate everyone showing up and everyone being here for today's episode. We're going to go ahead and get things going. Let's go ahead and get things processed. I hope everyone is doing well. Yes, we are still recovering from the hurricane, but recovering in a good way. You know, a lot of things are moving forward. You're starting to see people progress. You're really seeing people make things happen. So, Florida, for those who aren't aware, the area that I'm in, the Tampa Bay area, it was hit by two hurricanes, not just one, but two hurricanes within like a 2 week period. So while those were trying to recover from the first one, you know, trying to get different aid and things, another hurricane came through and was actually did a lot more damage than the first one. So you can only imagine, you know, those trying to recover, trying to get things going, and another hurricane comes through. You know, it's not very common in Florida, but it does happen. It does happen, and this is something that we dealt with, and this is something that we didn't necessarily sign up for, but you know, it did happen. So. With that being said, I appreciate everyone, all the well wishes that came from everyone, and just basically getting this going. So once again, for those who don't know, I am Chris Brown. I am a real estate professional, and this is State of the Real Estate Market. With State of the Real Estate Market, this is a channel that we not only talk about buying, selling, and investing in real estate, but we also talk about different hot topics regarding entrepreneurship, as well as building generational wealth. So that is a big thing that we like to cater to and discuss. You know, so many different things that we get to do these days, and you know, that's something that we must keep an eye on. So building that type of trust there. Let me get you guys squared away. All right, so guys, this is the market update. It is the 15th of November, 2024. As we go through this, I want you guys to have the most up-to-date information. If you guys are new to the channel, it's your first time even taking a look at the channel, be sure to like and subscribe. You'll find this, the information that is being presented is very fresh and new information. This is information that that is researched by me on a weekly basis, and I bring it to you on a platform that is free. This information you'll find to be very, very, very close in line with what you're hearing out in the bigger market channels. But this is information that is very useful and just down to earth. And if you guys have questions, always feel free to chime in with that and make sure that we get that set up for you. Let's see here. All right, like, subscribe, and what's next? All right, so what to expect with the housing market for the rest of 2024. So guys, for those who have actually been following me and really paying attention, I told you guys that things have just been so uncertain just because it is an election year. We just had the election just last week. We have a new president. Either way, it was going to be a new president. So we have a new president, and it's all about moving forward. Some people were upset, some people were happy. So at the end of the day, it's all about making the pivot. We've been making pivots for the past 5, 6 years, just making it happen. If you decide not to make a pivot, you end up getting left behind. So it's all about moving forward, making the pivots, making the adjustment. If there's an adjustment to be made, I'm sure with everyone there's going to be an adjustment, some type of an adjustment. So just understand whatever we're coming up against. The economy, I definitely say for the last 8 to 10 years, it just hasn't been a normal cycle. And people have been saying that, oh, this is what's going to happen, and then something totally opposite happens. Even I've been keeping a close eye on certain markets, very key people that are out there that are very influential in regards to the economy. They've even been providing certain hints as in what's going to happen. And those things didn't quite happen. As markets going up, markets crashing. During the pandemic, we had real estate market that was soaring. But these are things that we just have to kind of prepare ourselves for, understand what your game plan is and what you need to do. Don't always predict it or try to predict. Just follow the current trends. That's what it's all about. Following the current trends. A lot of it's unpredictable. I agree. A lot of the real estate market right now has been unpredictable, but that's what it is. Are interest rates still an issue in the market? Guys, the interest rates have been a situation for the past couple of years. It's 2024 right now. So since 2022, we can say that the interest rates have been of interest of a lot of people who probably particularly did not pay attention to interest rates. And I see more people have become educated in regards to interest rates in the past 2 years than they probably have in the whole lifetime. I know I've watched a lot of the different economists. I've been researching different economists in regards to how the interest rates are going to be and what should we expect moving forward. A lot more people are saying that we should anticipate going back to the previous trends where like during the springtime, the interest rates will experience some type of decline. We're looking at the unemployment rates. We're looking at the inflation rates. Is that coming down? Those are things that we're all looking at and things that we probably didn't pay attention to in the past. Let's be honest. Who paid attention to inflation? If you can afford it, you can afford it. That was the normal conversation. Nowadays, moving forward, we know there's a reason why people can't afford certain things. So, especially with the housing market, we were spoiled. And I tell everybody, we were spoiled from the get-go. And people didn't really believe me because that was their first time experiencing interest rates. I know when I got into the real estate market, this is a number of years ago, I was excited just to have a 7 or 7.5%. And now I have to be honest, I was ecstatic to have a 7 or 7.5%. And when the rates were down, below 3%, I'm like, what? It's like you can buy twice a house almost, it feels like. The payments, it just made sense. You're able to cash flow with your investment properties. Your current property, you can afford a lot more home than what you were able to in the past. So these are some of the things that people were spoiled about that really didn't realize it, that they were being spoiled. But now that the interest rates have gone up, and there's going to be an article I'm going to share with you guys in regards to what has happened since post the election or right before the election. Some of these articles, they may have posted or published them like a week after, but if you should really look at it, the data that they have, it's in regards to just following up to the election. So keep that in mind as we move forward. Like I said, I present this each month. So each month I'm always giving an update on information, past information, as well as new information. So keep that in mind. So let's go ahead and move forward here. We have housing prices. Housing prices they're really gonna, let's say, stay about the same. We may see a little bit of a settleness with the houses, with the homes. I've had people ask me, should we expect the housing prices to drop dramatically? And no, people are still asking me, are we expecting the 2008, 2009? No, we are not. We are not expecting that at all, guys. Keep that in mind. We're not expecting 2008, 2009. This is a totally different economy, total. And the reasons for that crash back in 2008, 2009, we have a better eye on things. We have a better way of avoiding that same situation, financial crisis that was. As we're moving forward right now, it's the interest rates. Interest rates are stopping people from buying and getting out there and buying more. And, it really softened the market. People that were buying homes, you had people buying homes left and right, investment properties, you had them buying regular homes, buy a home, live in it for less than a year, then look to sell it again. It reminds me back in the day when we had the big boom before the 2008 2009 crash. I remember living in a house 4 months. I lived in a home for 4 months and then sold it and made 30,000 on the deal. So it's very interesting as in how we transition and what people are anticipating to happen. A lot of people were able to capitalize on bad markets, markets that are not strong. A lot of people understand how to win during those situations, but at the end of the day, it's all about maintaining your financial strength as well as your cash flow. Understanding how to maintain that, keeping that strong when we go through any times of uncertainty. That way, you can actually control your destination. It's not letting the economy control you and what you do next, especially if you have a family, you have businesses. Control it. Control your financial stability, your financial strength moving forward, especially going into 2025. If you're doing investments, make sure the investments make sense and don't anticipate things that happen. And that's why you're buying an investment property. Okay. If you're buying a home, make sure it makes sense to your current situation versus, I plan on getting a raise in the next 2 years, or I anticipate the market to go up and I can use equity from there. Don't play the equity game. Just go ahead and move forward. If it makes sense to your personal budget, make it make sense. If it makes sense to cash flowing, then go ahead and make it make sense. Continue to do that. Try not to overspend for these properties, especially these investment properties. Please understand what you're doing when you're getting into these investment properties. Everything's a risk, especially when it comes to investments. Understand what I like to call is your level of investment, your level of being able to take risk. What is your risk factor? Some people have a higher risk factor than others. So for those who have a higher risk factor than others, they take more chances. Those who have a lower risk factor, they can't take all of those chances. So it has to make sense moving forward. So keep that in mind, guys. Should you consider selling your home? It depends on your situation. I'll be honest with you guys. A lot of people ask me this on a regular basis. Should I consider selling my home moving forward? If your situation calls for you to sell your home, if you're moving to another state because of a job, that's a situation where you got to sell your home. If there's a death in the family, loss of income within the household, you're probably in a position where you need to sell a home. There's always those situations where you're going to have to sell the home. That is the case, then you're going to sell your home. If you're in a position where you just want to stay in the same area, you just may want to upgrade your home, does it make financial sense for you? Because if you transition to another home, a lot of people, if they try to buy their current home, they could not afford it. And don't get me wrong, I'm dealing with people who are sitting on lots of equity in their home. When I say lots, I mean like $100,000, $200,000, $300,000, $400,000 in equity for these properties that they've owned for maybe even a number of years. And now that they're finding out that the value of it right now, they're just like, wow, I might as well go ahead and cash out on this, because it gives them an opportunity, depending on the individual, to move into something different. They may want to go get land and move out to Oklahoma. And I don't say that in a bad way. I say it as in like some area where there's not a lot of people, where they can just buy a home somewhere, sit on a bunch of land and just relax, where the bills may be less expensive, where they can just relax, retire early and live the life. begin to invest, make your money work for you. That's what it comes down to moving forward. Those are some of the things I know for a fact that I'll be sharing with my guests, by different subscribers moving forward, especially in 2025 in regards to investments. I know a lot of people have been anticipating me coming out with this course that we have for real estate investors and those who are looking to build generational wealth and doing it the right way. It's not just coming in and just buying something and just saying I have an investment property. It's about understanding how to negotiate those obstacles that you may have with contractors. That's going to be our main focus, understanding how to navigate the obstacles of dealing with contractors, providing a blueprint, step-by-step blueprint on how to navigate those obstacles. That's what I'm going to be moving forward with in 2025 and sharing that information with you guys to be able to stay tuned as you guys are getting more and more information in regards to building generational wealth, investing, the real estate market. Is all going to be there. So definitely stay tuned. So post-election, we're done with it, guys. It's finally done. People have been asking me about the whole election situation. And now that we have this squared away, we're done. The post-election is done. We are done with it. And with that being said, we don't have to worry about the big concerns that people had in regards to it. Now it's all about just moving forward. How are we going to progress moving forward? So as we're progressing and making things happen, we will have that opportunity to distinguish what's next for us. So I entrust in you guys to do the right thing as you guys are really making it happen. And as you guys are just looking to turn and transition in 2025. So a couple of things as I typically do in the state of real estate market, and as I'm doing these updates, I share with you guys some of the information that I'm finding out. And these are written by different economists, articles that I come across, that is written by different economists, different influencers in regards to the economy, people who do this 24/7 for multiple years. This is their thing. So one of them is an article I wanted to share with you guys. It says mortgage rates ease, ending a 6-week climb. So basically, interest rates were starting to go up again. They were definitely going up again. As people were like, we had like a little dip, and the dip may have happened for literally less than a week. And you saw how buyers were starting to do applications again for loans. And that's what was happening. But after that slight period of time, interest rates started to rise again. So with that being said, rates on 30-year mortgage slipped to 6.78% from 6.79% last week. Borrowing costs on 15-year fixed rate mortgages fell to 5.99 from 6.0%. So the average rate on a 30-year mortgage in the U.S. edged lower this week, ending a 6-week climb. The rate slipped, as we mentioned, from 6.78 to from 6.79. So 6.78 from 6.79 last week. Mortgage buyers, Freddie Mac said, and this is from the Freddie Mac. If you guys are familiar with the Freddie Mac, this is still down from a year ago, and when the rates averaged 7.4. So it's less than it was. The rates are less than what it was last year at the same point in time. So those are some of the things that people are really concerned about. And, if you look at it, we're in a better position. People who did purchase, it's not that, they did something bad. It's just that they're in a better position. So once those rates do drop, they're going to refinance. So that's the game right now. It's about going ahead and getting the property, because once these rates drop, and it's already proven that people are starting to apply for more loans. The inventory is low, so it means as buyers come back into the market, there's going to start being more competition. So that's what I'm telling my sellers. We're going to start having more competition. We're going to keep an eye on these rates, and as these rates are out there, and as those rates start to dip, that's when people are going to start putting in that information. Okay, let's put in this loan. Let's put in this loan. And when they put in that loan, then they're able to be the first one because they're ready. Stay ready so you don't have to get ready. And that's the name of the game moving forward, at least I can foresee for the next 12 months. just staying ready so you don't have to get ready, just be in the better position than the next person to be able to basically pull the trigger when it comes down to it. Like, hey, if you see something that you're looking for and that you want, it's going to happen. And then also having patience. If you're on the buying side, you're going to have patience moving forward. It is definitely going to be a situation for you guys. Another situation, America's empty apartments are filling up. So because there's been such opportunity out there. Once empty apartment units are being filled up, people, they had a vacancy situation with the apartments because there were so many new apartments that were out there, and now people are starting to adjust and say, "Hey, let me go ahead and start renting." So that's some of the data that was discovered. This is an article out of New York from the Wall Street Journal, and that's what they're saying. They're saying these apartments are starting to fill back up. So first time in 3 years, the vacancy rate stopped increasing last quarter, according to CoStar. So this is something that they've been really paying attention to for the past couple of years, looking at that vacancy rate because there were so many units being built. And you have, and I can attest for it in the Tampa Bay area, that you have so many units that are being built, and people are coming in, they're filling them up, but then you have them being built just as fast. So as it's starting to catch up, people are starting to move into these units. The units are starting to be filled. If it's condos, people are buying condos, especially downtown. If they're leasing them downtown, you're finding a mixed use, whether they're leasing or even buying. I know in downtown St. Petersburg, there are a couple of new projects. And I say new projects where, you have a 39-story, 42-story, 49-story buildings being built. And these are condos to be purchased. And they're starting off at $1 million, guys. So starting off at $1 million. So in order to get one of these people are coming with big chunks of money. So they're probably going to be selling those properties from somewhere. And just knowing how Florida is, they're probably coming from the West. They're coming from the Northeast, some from the Midwest. They're coming from somewhere else where it's higher price markets. And now they're coming in. They're seeing the value in an area that is developing, especially Tampa Bay area. Everything is developing here. Everybody's moving here. It's one of the hotter metros in the state of Florida, Tampa Bay. And people are moving here. People are picking up these properties. So they know something that we don't know. I just follow the clues as we go through this whole process. Follow the clues and just be a part of it. Just be able to shift. So if you're looking for $1 million condo, let me know. I got you covered. We have a number of new projects coming in the Tampa Bay area that I can get you set up with. So feel free to give me a buzz. All right, but that article that came from the Wall Street Journal. Another situation: Florida home prices now easing. Now that we're out of this whole election season and things are moving forward. With that being said, people are starting to make things happen. State of Florida remains an attractive destination for real estate, and the Realtor.com's recently released in September housing overview of the 50 largest metros report shows there might be some bargains on the Sunshine State as homeowners seem to be trimming prices to revive buyer interest. So I mentioned this before, and for those who've been following me for a while, people were just still throwing the properties out. This year, up to this year, they're still throwing the properties out there just to see how much people are biting. They're still willing to pay the higher price. And some were sitting on the market for a period of time and expiring on the market for a period of time. And I've seen some great homes that have been renovated, looking great job on the renovations, but it didn't have certain features that people are looking for. If you guys are follow me, some of the special features that I was telling you guys about is people are looking for the extra features. What is it next to? How are the schools? Does the property have, what features are on the property, such as a pool? Does it have extra land that you can build on maybe in the future? What's unique about the property? Does it have an HOA? Some people are familiar with HOA. Some people like HOA. Some people prefer not to have an HOA. These are things that buyers are looking for now. So they're being a little bit more, I say, pickier. They're being like, hey, this is what I want in a home. If I'm going to spend the extra money for it, this is what I want the home to have. So if the property doesn't have that, it's not like it was before during the pandemic where you literally, your house could be falling down almost and people were still paying 20, 30, 40,000 over asking price. So that's not the case anymore. People are being a little bit more pickier. And plus, even with the lenders, they're being a little bit more stringent. If the property can't be insured, they're having an additional situation as well. Okay. So let's see here. All right. So following up here, let's see what else we got here. Consumer sentiment climbs. So this is huge. This is huge. Uh, what this means is like, as I mentioned before, and this is another article. This is out of Washington in regards to one of the indexes that a lot of consumers. It's a consumer index. It's called the Michigan Consumer Sentiment Index, and this basically tells you the interest, how high the interest is for particular buyers, and what for particular buyers, like I mentioned before, that when those interest rates dipped just a little bit, there was a situation where you had more buyers jumping into the market. So as those buyers are jumping into the market, that increases this index. And so they've recognized that the index has increased. And with the increasing, they're starting to see that momentum. Now, obviously, we're only in November right now. A lot of these reports are from the previous month. We'll see how things are going to end up for the end of 2024, and then as we roll into 2025. But keep an eye on it. Economists are saying that, hey, this is starting. We're going to start picking up a little bit of momentum. And with us picking up a little bit of momentum, this means things are really going to start happening. So, but it's the uncertainty. You know, we've been here and done that before. So it's all about the uncertainty, what's going to happen next. So let's pay attention to that moving forward, guys. Okay. Let's see if that's going to continue. Other things that it was saying, so that you understand it, the index climbed to 73 from a 70.5 in October, and is the highest since April. That's April of 2024. The survey responses for November were concluded on Monday, and this was just before the election. So these numbers came out just before the election. So this is one of those articles where we really want to follow it until after, for about another month or so. Let's see what happens. Let's see if it still has the same projections as it did before the election. Expectations overall, personal finances climbed 60% to part due to strengthening income prospects, and short-run business conditions soared 9% in November. Surveys of consumers director Joanne HSU, I'm not sure how that's pronounced, but HSU said long-run business conditions increased to its most favorable reading in nearly 4 years. Sentiment is now nearly 50% above its June 2022, but remains below pre-pandemic readings. So that's a lot that's coming up, guys. They're starting to project again. But let's just pay attention, we've had these little clues before, but let's see what really happens, okay? All right, real estate investing to grow your finances. So this is one of the last articles I wanted to share with you guys. So I know for me personally, this is the direction that I was going in and educating people more in regards to investment properties. And it's more than just talking about it. It's actually having a sit down and actually actual class setting, course setting, digital course setting, where you guys can actually educate yourself on not only buying investment property, but understanding how to buy it in the right market, understanding how to buy it at the right price, understanding how to navigate the process of communicating with contractors, and how you position yourself in those negotiations. And that's going to be key, positioning yourself in those negotiations, because it's not so much negotiation where you can get, cheap prices, but it's more or less understanding how you can stay control of your particular project and not get behind in your project where you're basically waiting and you've given up all your money. We have that situation happen. I've just talked to 3 people this week, and everyone's contacted me after the fact. And it's just like, I know I don't know your contractor, but this is how you communicate with your contractor as in how you're going to move forward. They're doing, and just a prime example, just to be real brief, one of the things that I tell people to try to work with their contractors is that, you want to understand the cost. And what I mean by the cost is not just say, hey, I'll do that job and it costs 15,000. Okay. Well, what's 15,000? What's the material cost for that situation? And then what is the labor cost for that? So splitting it up so you can understand what the labor and what the material cost is. And then moving forward, it's like, hey, if we're starting this project, if I'm covering, say, material costs, should you require half of a deposit? If it's going to cost 15,000, are you going to require 7,500 up front? Well, why should it require that much up front? Because I'm handling all the costs, out of pocket costs initially. So you got to understand and then you break down your projects into different phases so that you can understand how long each phase is going to take. And then with those phases, if it's going to take less than, 7 days, then that's a week. So if you start them off with 10%, that should be able to get them through that first week, because the project that first phase should only take less than a week to get done. After that first phase is done, then here's the draw. You give them a draw. So why are you giving half of the job up front? They haven't even started day one yet. Think about that, guys. So that's something that I'm going to help you guys navigate. I know some people, it's making people really think. It's like, oh, that kind of makes sense. If I'm paying for everything and I'm controlling the cost, why am I having to pay more? Think about that, guys. So that's something to think about. But just moving forward, investment wise, think about becoming a landlord or get a property management company. Consider house flipping, but it's got to be the right market. Every market that you can flip a home in. And home has to be unique. These unique features are going to catch a lot of people. Buying your own home, that is an investment, guys. Buying your own home is an investment, but understanding what it means. You may not buy it top of market. Perhaps you're willing to do a few repairs, cosmetic repairs, some of the bigger repairs. You never know. Or invest in different real estate trusts. Those are things that you guys can invest in moving forward. But guys, I just wanted to share that information with you. This is another episode of State of the Real Estate Market. We're out here making things happen. And as things are happening, feel free to reach out to me. A lot of people are asking me, hey, how can I get a hold of you? Yes, you can reach out to me. Feel free to contact me. I want you guys to reach out to me so that we can, if you have questions, feel free to do so. I want you guys to connect, set an appointment. Set an appointment. That's the best way. Set an appointment with me. For those who are watching the channel for the first time, or you find that this information may be helpful to someone else, be sure to like, subscribe, share this information with someone else. As well as, here's my contact information. You guys can follow me on social media, Chris Brown, RE Pro. Feel free to do so. Down in the description, there should be a way of you to set up the time, and you and I can do a short one-on-one. That's a free consultation that I do for everyone who has a bigger interest in moving forward, and I kind of point you in the right direction. So keep that in mind, guys. You guys are awesome. I appreciate you tuning in once again this week or this month for State of the Real Estate Market. This is the November edition. Like, subscribe, share this information. This is not only a channel that we talk about real estate, but we also talk about buying, selling, investing, different ways of building generational wealth, as well as hot entrepreneur topics that are out there. So stay tuned, stay easy, take care. It's Chris Brown, your real estate professional and marketing entrepreneur.